I'm going to share with you everything I've learned flipping over 600 pieces of land in the last 5 years and helping hundreds of other folks do the same. Collectively, we've done thousands and thousands and thousands of these land flips together. And I'm going to share everything I know, like just quick hitters, everything that comes to mind, everything that I think you need to know if you're just getting started or if you're a few years in. I'm going to riff. We're going to get this cigar queued up here. Totally different style of video. No fancy editing, no fancy cameras. Just hanging out and talking land. Now, if you don't know about the land business, it's probably the best kept secret in real estate, honestly. We're buying land for 20, 30, 40, 50 cents on the dollar and turning around selling it for 60, 70, 80, 90, 95 cents on the dollar. And these are deals typically that are netting us between $25,000 and $250,000 per deal. Pretty cool. So yeah, my journey has changed a lot over the years. I started off doing crappy, really small little desert lots in the middle of nowhere, deals that really have no intrinsic value, and the only way we could sell them was via owner financing. We built up, a no portfolio that was paying us multiple 5 figures a month, but these were just crappy properties, right? And we were doing a couple hundred deals a year. I think our best year was right under 300 acquisitions. I think 220 sales in that year. I just didn't know how to grow that model anymore. There was so much volume that it didn't seem like there was any path forward. So a few years after that, we started flipping what I call mid-market properties. These are properties that are between $25,000 and $250,000. These are properties that we're looking to double our money on. And really, that's our model today. So let's crack into it. We're going to try this. I think this is like an Indonesian cigar. I'm here in Bali right now. Yeah, not too shabby, I would say. I've been smoking a lot of Cuban cigars since I've been out here. It's actually not bad. Terrible for engagement. It's okay, though. I really don't care. The retention metrics are probably going to be terrible for this video. I also don't care. Sit down, get comfortable, maybe grab a cigar yourself, because we're going to get into it. Okay, the first thing is that in land, what I've learned is that the level of effort for big deals, small deals, medium deals is not proportional to the size of the payday. So if you're just getting started, my first recommendation to you is sidestep the small deals, okay? Entirely sidestep them. In some cases, the workload to do a medium or a large deal is actually substantially less. So I'll paint a quick example of a deal that we're doing right now. Okay, this is a deal that will probably net us, I don't know, maybe $200,000, maybe right under $200,000. It's a deal that we bought for $121,000, $2,000 in improvements to it via a survey, and we'll sell it for, I don't know, $340,000, something like that. There's closing costs, realtor fees, all that stuff. And this deal has been like the least work, literally the least work. Closing so smooth, sellers so easy to work with. We listed on market 2 offers on 2 of the properties in 24 hours. We just got another offer before this video, before I started recording this video, and it's been up for a week. Just easy breezy, lemon squeezy. And on the counterpoint, I've got these crappy little properties still in our portfolio, right? These $4,000 properties in the middle of the desert that generate whatever, 50 leads a month. They're all tire kickers. They have no money. Someone actually puts a down payment, owner finance it. They default 30 days later. It's just a nightmare, man. Now, a lot of folks have this irrational belief that if you're just getting started, you're not very good yet because you're not very good at it. You should only go after small deals. And it's actually not true. That's why inside of Leah, we just do mid-market deals. We find that $25,000 to $250,000 sweet spot has got the most number of buyers. Those deals have the biggest bang for our buck, the highest return on our effort, and they're pretty easy to do. Now, if you start trying to do $1-million, multi-million-dollar deals, it's a whole different can of worms. And honestly, at that point, you're not in the flipping business. You're really in the land development business, which is my second point. Do not try to become a land developer overnight. It might be the career path for you down the line, but if you are trying to get out of a rut, if you are trying to change your financial situation, if you're trying to leave a dead-end job or leave a dead-end business, you're trying to find a better business, greener pastures, flipping land is the path to that. Land development, entitlements, major subdivisions, that is not where you start. That is one of the worst business models for a new land investor. I would not recommend starting there. The risk is substantially higher. The level of skill and knowledge that you have to bring to the table is substantially higher. The third parties that you have to rely on, there's just a lot more of them. It's a bit of a good old boys club. Do you know the developers that you're selling to? Do not start there. The fastest path to building a 6-figure business that frees you from a dead-end financial situation is just flipping land, okay? See, a lot of folks that get caught up in the glitz and the glam of value add, and they don't understand that there's an 80-20 in value add. Okay, if we think about value add, it's not that it's off limits, but there's easier ways to add value to land. Now, why would we add value to land? Well, because the economics don't make sense for a standard flip. Not every deal we can buy at 50 cents on the dollar, but there's deals that maybe we buy at 60 or 75 cents on the dollar. And to make it worth our time, we're going to go in and add some value so we can capture in excess of what the 100% retail value would be. So let me talk about some really simple ones that I recommend all land investors to start with. This is a really good cigar. Really good. The first that I would recommend starting with, really simple, brush hogging. Okay, you're like, Sumner, that's value add? Yes. Let's say you buy a 5-acre parcel, okay? It's got county road frontage, and along that county road, it's got foliage and brush and trees. And so a buyer pulls up to the property, they look at it, they don't see anything. Buyers, especially retail buyers, they're fickle beings, okay? They need to see the visual. They need to see the dream painted for them very, very clearly. And so when you pull up, if they can see the property, they can see the interior of the property, and better yet, they can walk or drive to the interior of the property. That is a huge, huge, huge value. If you go on Zillow right now, look at any wooded county or zip code. See, there's a lot of properties that are just woods. You don't even know what the heck you're looking at, and you can't get to the interior of the property. So for the buyer, it feels like this just isn't usable. I don't even know what I'm looking at, so I'm not going to submit an offer. There's a real ROI to brush hogging or brush clearing. It's usually about $1,500 to $2,000 per acre. Not only will it sell your property faster, but there should be a marginal return on it. You know, it's not going to 2x or 10x the value of your property, but it will have a return, and it's certainly worthwhile. But more than anything, we can really compress how long it takes to sell a property. I've seen properties that aren't selling, whether it's 3 months or 4 months or 5 months. Someone clears it, they take better photos, and the property sells in 30 days or less. I think this thing's already gone out. The next thing is that there's millions of properties out there, millions, I'm assuming, millions, if not hundreds of thousands of pieces of vacant land out there that currently don't have legal access. And so one of the easiest ways to add value is to actually go and create easements. Now, there's a lot of ways that we can do this. You could sue the state to try to get access and yada, yada, yada. But I don't even recommend doing that. I recommend going and buying properties that are next to adjacent lots that do have access, calling the neighbors and trying to get an easement. Now, we don't close on that property until we have the access. We're going to put it under a long close or double close contract. We'll go and try to get access. And if we get that easement, we'll get it recorded, get a survey done, and boom, you just took a property that you might have bought for 10, 20 cents on the dollar. Then now you can go capture 80 or maybe 90% of retail value if the access isn't too shabby. Now, it might not have physical access. You might not have a road cut in. That's okay. If we're still not super far away from a paved main road or just a county road in general, it's not too shabby. Now, of course, we have to pass off a discount to the next buyer, right? It's not going to be 100% of retail value, and that's okay, because these deals we can buy for pennies on the dollar because there's such an arbitrage there. Because for the seller, how are they going to go do that? They don't even know where to start, let alone they probably don't even want to do that. And if they wanted to do it, they probably would have already done it a long time ago. That's the truth of landowners. The intrinsic connection to the property is pretty minimal, right? And usually they live out of state or they visited it like 2 or 3 times. They don't really care about it. Now, in most cases, you're going to have to give something to the person giving you access, okay? Usually you're going to pay them a couple $100, maybe a couple $1,000 for that right away. Some cases they'll just grant it to you. It's rare, but in some cases they will. Or in some cases they'll make an offer and say, look, I don't want to give you access. I want to buy that property. And because we hadn't closed on that property yet and we had it under contract, we can just connect the dots and essentially do like a simultaneous closing. So it puts us in a really cool position. It's kind of like a no-lose situation, and all you really had is the EMD risk on that double close contract, which I'll talk about that here in a second. The third one is like exemption-based subdivides, okay? So going and finding out what are the exemptions within this county, within this state, and just subdividing off of that, doing like a minor subdivide or a lot split. Those terms, they vary wildly from state to state and county to county, but that is the 80-20. There's a true 80-20 to go in and say, this county only allows me to take properties down to 5 acres, and if I go down to like 3 acres, now it's a major subdivide, just go to 5 acres. Yeah, are you going to not add as much value on a per acre price? For sure, but you are going to avoid immense levels of brain damage. And I can't tell you, when you create these deals in your business that become black holes, it's not worth it, because we got to think about the return on energy. Very, very, very rarely is it worth it. Yeah, it's not that it's not worth it forever, but if you haven't cracked the code on doing $300, $400, $500, $1 million a year in your land business, I would not even fret about it, okay? I know land investors that will sell $10 million worth of land this year, and they're not doing like hardly any value added. And if they are, it's like a subdivide here and there that's an exemption-based subdivide. Very, very, very simple. All right. where do I want to go from here? There's a couple of things that was dawning on me as I was talking about that. I think the first thing is if you're new in this game, or again, you're not doing consistently multiple six figures in your land business, which is kind of that's the baseline, honestly. Now, this is a great 0 to 1 business. This isn't a business that you're going to scale to $50 million a year. I don't think so. I think it's pretty much impossible, but it's a great business to go from 0 to 1, whatever one is for you, probably a couple $1,000,000 a year. After there, I think is diminishing returns. There's probably better opportunities, more like 1 to 10 opportunities that I think of. But if you're just getting started in the world of business, in the world trying to free yourself from the rat race, you need a business that's going to print cash, that's pretty easy to start, has a really, really clear path to getting you to somewhere where you can leave your whatever dead end situation within like the next 12 to 24 months. And flipping land certainly is that. So if you're in that cohort, the best thing that you can do is to specialize. Now, I know that is kind of counter to what I might say for general life advice. I think for general life advice, being overly specialized is silly. Specialization, they say, is for insects, right? I think as a human being, we want to be diverse. We want to be well-rounded. You want to be a Renaissance man or a Renaissance woman. But in land, when you're first getting started, specialization is going to pay dividends, okay? By eliminating things that might not be relevant right now or might confuse us or might just carry out our energy too much on a surface level opposed to going really deep, we're actually going to create more leverage by eliminating things that just aren't going to have a high bang for a buck right now or a high return on our energy. So when you're first getting started, you want to specialize within certain brackets. So picking a strategy, you're not trying to do all strategies, right? I think the mid-market strategy that we teach inside of Leah is the best strategy. The next thing is picking one marketing channel, okay? Don't try to do SMS and cold calling and this and that and that. No, one channel. Get that channel to perform, okay? Let it have a clear positive ROAS, stabilize it, put a team in place to run it, then add another channel. See too many land investors that are spread so thin, trying so many different things, and none of them are really working that well. Just pick one. Now, I think mail is the best place to start for any land investor because it's high leverage and it's going to bring back the most qualified leads to you to where you're not spending time pre-qualifying 150 leads a month just to find the 3 deals in there. Mail looks like we send out mail. Say we send out 10,000 letters, maybe 40, 50 people reach back out, and maybe we pull out 2, 3, 4, 5 deals from that. Great, perfect. We didn't have to sift through that much to find the good deals. You start doing, let's say RVMs, right? Send 10,000 RVMs, you might get like 1,000 or 1,500 responses, maybe even more. And there only might be 3, 4, 5 deals in there. So you got to sift through a lot of noise. Now, it's my opinion that sending a piece of mail with a priced offer is the best thing that you can do. It brings back, again, the most pre-qualified leads because they're pre-qualifying via price. It allows you to not be that great on the phones, which when you're first starting out, you're going to be not that great. It's very forward. It's saying, hey, here's a price I can offer. Call me if you like that. So you don't get into these monster haggling and negotiating battles. Now, you still have to negotiate. We'll talk about that here in a second. But it definitely trims it down. It allows you to make a lot more mistakes on the phone, which naturally every person will in the beginning. So I really prefer that model. And again, return on effort, return on energy. I'd rather you take less phone calls, but make more for every phone call because more pre-qualified leads are coming your way. The other thing is that a lot of these other marketing channels require you to be in this reactive state where you're always reacting to the inbound text or you're always like sending out the RVMs. Like it's very much manual. And then you're always reacting to the sea of leads coming in where mail, we can do it proactively. We can set up our campaigns at nights, weekends, go price our offers, send them out to 1,000 people, let the calls trickle in. You might get 0.25% or 0.5% response rate, right? So send 1,000. All right, maybe you get 5 phone calls back. Like it's really, really minimal, but those 5 phone calls, those are taking shots on goal. And if you're going after the right properties, well, maybe one of those might convert into a deal. So that brings me to the next point. We need to focus on going into a few markets that have the kind of inventory that we want. Just like we talked about specializing, specialize with the kind of properties you want to go after, specialize with the marketing channel, and specialize in certain markets that are actually going to deliver that. I see folks that say, Sumner, I want to do really big deals. I want to do deals that make me 20K per deal or what have you, but they're working in markets that couldn't deliver that. So we need to specialize in markets that can actually deliver the kind of inventory that's going to make us the kinds of returns that we want and it has the kinds of properties that we want to go buy. And on top of that, you need to be working in markets that have liquidity. You see, the biggest mistake you can make in this business is buying land that no one wants to buy. There's 2 reasons that happens. One, you buy land that frankly just is crappy, just like your crappy little lot that has no access, it's on the side of a cliff. No one wants to buy it. So it's going to be really hard to sell it. Now, the crazy thing is pretty much every property will sell. But I'm in the business of turning capital. I'm not in the business of trying to sit on a property for 3 years, generate 500 leads just to find that one buyer. No. I want properties where I bring them to market. People are kicking down my door to buy them. It's because we bring good inventory to market. Things that are actually in demand, kinds of properties people actually want to buy. Properties that don't have too many problems. They're not perfect properties, but not too many problems. Things like decent slope, not too much flood zones, not too much wetlands. Ideally, their utilities are close by, good road access, good topography, things like that. The basic core tenets of due diligence in land. And then I'm working in markets that have a high level of liquidity. And that's the biggest rub. In land, I say it's pretty easy to buy land, at least within the little category that we play in. Harder to sell land. Harder to sell land if you're in the wrong markets. So if you're in the right markets, people are kicking down your doors to buy that land. So we find markets to have these supply and demand imbalances, and we go bring the product that people want. It's that simple. So we look for markets that have 10 to 15 to 20% sell-through rates every 30 days. We talk about this more in other videos. In fact, we built a software tool called Land Insights. You go to landinsights.co to check it out. That shows you what markets to work in based off all the kind of our demand metrics and pricing metrics and things like that. So we look for these little liquidity pools, and we just go spend our marketing dollars going after the right markets where people want to buy land, after the right properties. And that means when we're pulling data to buy land, we're removing all the shitty properties I would never want to buy. See, I can guarantee you, if you're marketing right now, there's a good chance, there's a really good chance, pause. Good cigar. Really good chance that 30, 40, 50, 60% of the data, 60% of the people that you're marketing to have properties that you would never want to buy. Properties that are landlocked, like I said, have really bad slope, bad flood zone, bad wetlands, like yada, yada, yada. In fact, you might even be marketing to people that can't even sell you the land because it's a waste management service, or it's the water municipality, or it's the BLM. Like, they're not going to sell you land. No, I mean Bureau of Land Management. Everyone gets that confused. It's not Black Lives Matter, it's Bureau of Land Management. They're not going to sell you land. So what we do with our data to whittle it down and to specialize, right? To specialize across the board, the marketing channel, the kinds of sellers, like everything needs to be whittled down so you're only taking shots on goal. And that's going to create a wildly efficient business where you put $1 in and you're getting a huge multiple out. You're getting $10, $20, $30 for every dollar that you spend. We've got folks inside of Leah that are doing just that. I guarantee there's not a single other land program out there that has the level of ROAS that we have through mail. It's bananas. It's because we're so specialized in everything that we do. There's a lot of ways to make money in land. There's a lot of ways to skin the cat. We just teach you one way, the best way, in my opinion, at least for getting started. And that's why folks scale up to doing multiple six figures in 12 months, 24 months, 36 months. It's bananas. It's because we just do one thing. We just focus on one thing. We got people inside of Leah that are doing multiple six figures a month that are still doing the same thing that they started with because it works. Now, again, could it take you to 50 million a year? No, but don't even think about that. This whole notion of scaling is a fugazi. It's so silly. If you haven't gotten a business that gets to 0 to 1, don't even think about scaling. And that's my next point. Scaling might be the worst notion that's ever been brought to any business owner's mind. This whole scale culture that's been brought up through Instagram, it's a crock of shit. It's so stupid. Okay, you haven't even gotten a business that can get traction. Don't think about scaling. And number two, you probably don't even want to scale. Like you don't realize the trade-offs that you have to make. You see, everything in life has good and bad, and vice versa. All the bad has good. With scaling, you could have the prospect of growing a big business, but you don't understand what comes with that. See, people that are too concerned, they say, Sumner, I want to be able to do deals that make me $1 million. Okay, go do a deal first that makes you $10,000. Don't think about the scale and like it's so stupid. It's a far cry. And again, you don't even know if that's what you want. Honestly, you've probably been spoon-fed these ideas that scaling is the natural path for everyone. I've seen more good entrepreneurs and good businesses get crushed because they fell into this whole scale trap. There's nothing wrong with building a business that serves you, that serves your team, that serves your clients, and that's it. It doesn't have to grow at 200 to 300, 400% a year. Be happy growing at whatever, 10, 20, 30, 40%. Now, I think you do have to be growing as a business owner. It's really just a truism of life. Pause. So we're not looking to regress. We're not looking to stand still. You might have quarters, you might have years even where you temporarily stand still. The graph of your growth is not clean and even. There's peaks and valleys and there's lumps and bumps, but scale is a dirty word, and I don't want you to even be thinking about that. I want you to think about getting to 0 to 1 first, and that's why this model is so stinking good. Next, okay, there's really two areas that you need to master in the beginning of your land business. This is it. Everything else is kind of noise in the beginning. Okay, pause. Rats, they went out again because I'm talking so much. Two areas I really want you to focus on. Two areas that you should be consistently working on day in and day out. That's going to have the highest ROI in the beginning or highest return on energy. First one is marketing. And marketing as business looks like picking the right markets, looks like having the right marketing channels. maybe applying a price to it, so being good at pricing, having a marketing that produces, right? Marketing that has a return on it. That's why direct mail is where you should start, in my opinion. Next, how do you speak to sellers? Those are two things to focus on. There's a lot of minutia in between, but that's it. Those are the two skills that are going to have the highest leverage in the beginning. Now pause for real. And I'll use Leah as an example. We do 10 coaching calls a month inside of Leah. What are those coaching calls around? Market reviews, deal reviews, and reviewing seller calls and calling sellers and sellers coaching, because it has the highest impact. So once you crack the code on marketing, which is going to be your first order of business, how do you pick a market? How do you kind of break down a market? How do you price a market? How do you draft an offer letter? That's the first part, okay? Once you crack that code, it's pretty much rinse and repeat. The good news is you really need to learn it once, and it'll just keep on producing for you. The next meta skill that you need to focus on is acquisitions. And really, acquisitions is so stupid simple. Okay, there's a few things that you need. One, you need an acquisition process. Okay, what's the process? New lead comes in, what happens? Send an offer to a lead, but they don't sign, what happens? You haven't talked to a lead in 3 months, what happens? You need a process, something that's repeatable. You need an SOP for your acquisitions. It's that simple. The next thing is, who are you when you get on the phone? Well, I think you should act like you're like the seller's neighbor, right? Like you're just a Joe Schmo. You're not some big corporation, not some big Fortune 500 company. You're Joe Schmo who buys land and you want to buy their property, but you are going to be a hard line negotiator. You're not going to go and buy deals that don't make sense for you. You're going to stand your ground. You're going to ask for what you want, and you're not going to take no at face value, right? If they say no, it probably means no now. And so we'll keep on circling back in a very tactful and polite way. That's it. You just need to get really good at that. The hardest thing for a lot of people is they have this insane level of like imposter syndrome. They feel like they're like inferiority complex to get on these calls. You have to realize that the sellers that want to do business with us, the sellers that will do business with us, they have a problem that needs solving. They don't care if you went to MIT. They don't care if you've got some land development credential. They don't care if you know everything about septic systems. They don't. They've got a problem. They want you to solve it. Everyone else that has a problem with that was never going to do business with you anyway. So if you get laughed off the phone, if you say the wrong thing, if you get tongue twisted, or you say something about land that's not factual, it's really not that big of a deal. Okay, the people that want to do business with you, they don't care. And if you are trustworthy, you're integral, you do what you say you're going to do, people are going to want to work with you. Okay. So like, you don't have to get so hung up on knowing all the answers about their property, knowing all the answers about how deeds work, or don't worry about it. You take it one step at a time. When I started this business, I didn't even know what a deed was. Okay. I was so in over my head, but I knew I was taking one step at a time. And once I started talking to sellers that had problems, I just focused on their problem and just took it one step at a time. It's really that simple. There's still a lot I don't even know about land, and it's okay. I'm not the foremost land expert that knows everything about every kind of legal instrument out there, or every kind of variation of a septic system. No, it's okay. I play in one little domain. I can speak to strangers, and yeah, I have a system. That system that allows me to extract the most value out of the leads that we have from the least amount of effort. So I'm looking for that 80-20. Of course, you could say just call every single lead every day for the rest of your life, and yeah, that might be optimal, but we don't have time for that. So just finding that 80-20, that trade-off. And this is one of the areas that's so fascinating to me. Inside of Leah, we get folks that get on calls to join every month, and they're coming from other programs. And I'm not calling anyone out. I think everyone's doing the best that they can out there. But dude, these people, it's insane, the expectation. It's like, I send marketing and a deal comes back to me, and if it doesn't, I just wait for a deal to come to me. It's like, no, you make deals happen. You do sometimes have to force things and create things. It's not just that every deal comes to you served up on a silver platter. And one of the big unlocks for people is like, we'll show you how to find the right markets, how to go after the right deals, how to go get funding for those deals so you don't have to come out of pocket for those deals, and how to talk to sellers to make opportunities, right? A lot of times we are creating opportunities. We're unearthing what the problem is and creating a solution around it. And it really is that simple to build something that produces a couple $100,000 a year. Now, different skills to go beyond there, but at the beginning, that's it. The next thing is being overcapitalized in this business is actually probably going to work against you. And let me explain what I mean. The beautiful thing is, it doesn't take that much money to build a land business. It takes some money, but it doesn't take that much money. We always tell people inside of Leo, and I'm hyper conservative with this stuff, right? Like, I never want to let someone inside of Leah that's like on their last dollar. I see other educators that do that let people in that or have like $2,500 to their name. It's like, dude, not a good fit, because it does require capital to build. It doesn't require as much as you might think. So I typically tell people $10,000 is the floor, 20,000 is ideal. Anything after that, not really needed, honestly, and kind of works against you because with money comes the ability to pay for convenience. But I actually think that's a sin in business because if you don't know how the thing works yourself and you're trying to delegate off the rip and you expect to hire someone that somehow is going to know and you're going to be able to manage them, you won't. And so you do need to get your hands dirty first. You need to learn the things yourself first. When you don't have that much money to your name, you're freaking scrappy, dude. You make shit happen. When I first got into this business, I didn't know how to draft a deed. So I'm calling random strangers that work at the county that can't give me legal information. I'm begging them to give me legal information on how to draft a deed. Could I have called a lawyer and spent $1,000 to figure that out? Yeah, sure. But I was scrappy. So that extra $1,000 was able to go to marketing to have a real return. And I started my business with $7,000. Now it's tight, it's scrappy. I don't recommend it for everyone. Now, with that, though, we're not going to be able to fund your own deals. I don't recommend it. That capital should go to operations, marketing, software stack, simple stuff like that. All that other money should go toward, or all the money that would be needed to actually acquire deals, that's going to go from a funder. Okay, and that's why inside of Leah, we fund members' deals because that money has a higher return through their marketing. If you're getting a 10x return through your marketing and we're buying deals that have a 100% return, let someone else go put their capital there. They're going to be happy for the opportunity. There's more money than opportunity out there. So let them go fund that deal, give them a cut of the pie, go do more deals than you would ever be able to do on your own. It's awesome. And with that comes a really good sounding board because that money is going to more than likely have been experienced in land. And so it gives you a nice backstop, a nice second kind of pair of eyes, a second opinion to keep you safe in this business. That's another thing. I am at my core an irrational optimist. I really am. I really am. And I think it's served me in a lot of ways, but it hasn't served me in this business, and at least not on the acquisitions front. Okay. I probably more so than anyone I know that's been in this business for as long as I have I've made more stupid mistakes than I think most people. And stupid mistakes on acquisitions, buying things that I should have never been buying, ever. But that optimism got in the way. Be optimistic for the general outlook on your life, but I want you to be wildly pessimistic on every deal that comes across your desk, okay? Reason being is, A, there's risk there. You're putting money behind it. But two, even if we're buying at 50 cents on the dollar, you can probably get out of these deals relatively unscathed if you make a mistake. But the time suck, the black hole that creates in your business, the self-doubt it creates, it's vicious. I do not recommend it. I get these deals sent to me every week from people that want funding. They say, Sumner, I want to work with you. And while I appreciate it, and I don't take it lightly that people want to work on deals with me, I'm very fortunate that people want to do that. At the same time, most of these deals are train wrecks. Most of these deals are liabilities. It's because there's such a level of optimism there. They want to get their first deal done. They're so excited. They see the good in everything, which I think naturally most entrepreneurs do. But when it comes to underwriting land deals, pessimism. Okay. Think about the worst case scenario. Think about the fact that your property is probably not as nice as anything else that's sold out there. Think about the fact that you're probably not going to capture retail value. Think about the fact that the market could get worse. Like think about all those worst case scenarios. And even when we underwrite our deal, I'm always going to put a stupid tax, a stupid buffer. Like, okay, I think it could sell at 90% of retail value. I'm going to slot that down another 5%, another 10%, just to be safe, to afford me to make mistakes, because you will make mistakes in this business. And on that note, land is wildly illiquid. It's very lumpy. It's not like selling a stock in the stock market where there's a buyer just lined up there for you. And so that means prices are very variable. Where you have markets that don't have a lot of liquidity, you'll see prices all over the map where things sell at. That's just the nature of the fact that there's just not that many buyers out there. The bid and the ask is very thin. And so you have to understand that there's just going to be a bit of variation there. And on top of that, again, the property that you're bringing to market probably isn't the nicest property on market. That's just kind of how it goes, okay? With that, you need to be ultra critical. When you're underwriting comps and you're trying to compare your property to another property, go and look at it with a fine-tooth comb. There's almost always a reason that property is trading at the price that it is. It's got a perk test, it's got a septic system, it's got a well on it, it's got a driveway, it's got some clearing, all that jazz. Now, if all this stuff that I'm laying down for you here is confusing, well, it's because it actually is. Like, this business is simple, sure, it's not easy, and there's a lot of moving parts to it. And this is not a shameless plug for Leah. This is just a piece of recommendation in general. If you value your time and you value your goals, you are an idiot, literally an idiot with a capital I. And I say that because I was an idiot with a capital I, to not ask for help, whether it's partnering with someone, whether it's paying for a course, whether it's paying for coaching, whether it's partnering with a business partner that has more experience. I don't know what it looks like for you. Maybe it's becoming friends with a land investor. It's not so much so that money has to transact, but you are literally an idiot. I can't stress that enough. If you think that somehow you're going to watch this YouTube video or a YouTube video and go throw capital at the market to figure this out. If you were a doctor, you wouldn't do that. If you were a lawyer, you wouldn't do that. If you're an architect, you wouldn't do that. This is no different. The level of time it takes to understand this stuff is similar. I think it's honestly 2 years to kind of crack the code and be proficient. It's like getting your associate's degree. So I would treat it as such, right? And so you need some kind of mentorship. We really all do, like no matter what the domain is, especially as things start to become a little more convoluted and there's more risk involved. Again, this isn't rocket science, but there is risk involved. And I see people that are losing their shorts in this business that say, this business doesn't work. I put $100,000 into marketing and haven't gotten a deal. It's like, no, dude, you have hubris. You thought you were better than you were. You thought you were going to crack the code on your own, and you did it. And most people do not. I was extremely fortunate to have the good luck that I did. And honestly, a lot of that was good timing. I came into this business in 2019. We had the COVID rocket ship that happened in this business in 2020. I got lucky. There's a lot of demand out there. And so you could make a lot of mistakes and still salvage deals that you made whoopsies on. And I learned that lesson coming out of COVID. This market is not as forgiving. And most times this land business are not as forgiving, okay? A lot of the people that I know in land that are doing really well are actually super smart people, like super smart, like outlier smart. Seriously, it's weird because it's such a small little niche. And again, it seems simple, but the top dogs are sharp. These are people that are like, could have been high level whatevers. Like I'm talking engineers, I'm talking doctors, I'm talking people that have patents, that are inventors. Like, these are smart people that come in this game and dominate. So that tells you something, right? To be the top dog in this game, if you really want to take it to the next level, you are not going to do it on your own. It's just the honest truth. And if you value your time and you value keeping your capital safe, you'd be a fool not to. The irony is, to get educated or to partner with someone, to learn from someone, it's one step backwards to go 2 steps forward. Where a lot of folks have this, like the propensity to action. They watch so many Gary Vee videos that take action, take action, take action. They're like, F education, I'm just going to take action. And they get smacked in the face. They literally get smacked in the face by the market. They lose money on a deal. The marketing flops. They don't make any money. So again, by no means do you have to join Leah. But please, please, please don't take this video and just say, all right, I know what to do now. It doesn't work like that. This should whet your palate or help you if you are already on the path, okay? The next thing is to grow beyond 7 figures, okay? To get past that like low $1 million mark, let's just say $1 million. I mean, honestly, maybe even 500K to be totally frank. Let's say to get past 500K, you need leverage. And to have leverage in this business, I mean, honestly, the way this business works nowadays, you need people. People is the form of leverage here through delegating. And so in the beginning, everything in this business is very much like skill based, like learn the skill of underwriting deals, learn the skill of picking markets. But the return from that starts to diminish pretty quickly. Okay. Once you get to, I call it about 500K, could even be a little less. I could be wrong. But let's just call it 500K. The next meta skill to level up is, how do I find amazing talent? How do I find, or how do I learn how to train people? How do I cultivate and keep amazing talent? How do I train them? Because typically we're finding people that have soft skills and we're training them on the technical, but that doesn't, just because you know it doesn't mean you're gonna be able to translate it to that person. So you need documentation, you need a process to train people. And then 3, how do you retain? How do you manage? How do you lead? And that is so fucking different than anything you'll ever learn to get to 500K, okay? Most people that come into this business are first-time entrepreneurs. They get to that mark and they are drowning. And in fact, they become their own worst enemy because they don't know how to solve those problems. You need to start looking in adjacent industries, in totally different worlds, to learn about managing and hiring and leading teams. Learning from people like me or these other schmucks that teach land, myself included. I'm not calling anyone else a schmuck. Those aren't the places to learn from. Learn from the goated people, the people that have been building teams for 20, 30, 40, 50 years. Like, learn from the OGs and then apply that to land, okay? That's the meta skill to really level up. It's a really hard skill to learn. It does become a people business at a certain point. Now, the good news is, because we're leveraging an asset that's already in demand and we're just arbitraging it, there's no fulfillment really. There's not a lot of complexity. You're not inventing products. You don't have to service clients. And so you can actually have a really small team and have a huge impact. Like, our team size has actually gone down over time. Right now we have five people on our team, maybe 6 people on our team. Where at one point I think we were like 10 or 11. So we've actually gone down over time, but it's because we've gotten better at finding A players. That's the next thing. Dude, I wish someone told me this in the beginning. Do not try to make exceptions or excuses for bad talent. Okay, just because it's easy to hire the person, or because it's what's right in front of you, or because you think that's what you're worthy of. No, hold out. Find A players. The difference between A players and C players is not linear. It's an exponential difference, and this is the thing that I've been learning deeply currently and over the last year. A players only. It's literally a 10x difference. So I've got two team members. I won't name their names, but truly, if I look at it, it's a revenue producing role. There is a 10x difference between the results that they bring. 10x. Now there is a pay difference there. Okay, you are going to pay more, but am I paying 10 times more? No, I'm not paying 10 times more. Tells you something. So find A players. Now to find A players, you've got to be an A player. You'll never attract A plus talent if you're not an A plus leader, A plus business owner, and before that, an A plus person. Your habits matter. Who you are matters. Who you show up as matters. Do people respect you? Are you admirable? Do you stick to your word? Are you an impressive person? No one's ever going to follow you if you're not it. Like, you've got to be it. You've got to be the person, the guy, the gal. But anyone can become that. It's about the habits and the skills that we develop. And so I think part of leadership is becoming like, who are we outside of work? And who we become outside of work is who we kind of the person that we bring to work. And if there's holes in you as a person, people will see right through that. And I am not infallible. No one's infallible. You always have holes. You always have cracks. But there's work to be done there. And to get a little woo-woo, to get a little bit meta with you, I really believe that if you want to be successful in land or in any other endeavor, how you do one thing is how you do everything. Who you are outside of work, it carries over to how you show up in work. It carries over to your results in work. If you can't take care of the small stuff, you don't deserve the big stuff. You don't take out the trash on time. When you see dishes in the sink, you don't wash them. If you're not polite to people that you meet that are strangers, like, if you're not good at that, I don't think the world wants to give you the big things. That's just my belief. It's been my experience. I've seen it time and time again. So if you drop the ball in the small shit outside of work, you'll never get the big stuff, in or outside of work. So become the person. All right, guys, I'm about to go do a boxing class or go train with a boxer. I'm going to call it here. If you guys like this video format, let me know. Give it a thumbs up, like, comment, subscribe. It means the world. Take care, guys. Bye.